Hello everyone and welcome back to Bony's Life. It's your host Bony, here to break down another wild week in the crypto markets. We've seen it all: soaring highs, regulatory drama, and a few surprises that kept us all on our toes. So grab your coffee, settle in, and let's get into it. This past week was a roller coaster, to say the least. The global crypto market cap is currently sitting pretty at around $3.3 trillion, with Bitcoin dominance holding strong at 57.5%. We saw Bitcoin flirt with the $100,000 mark before pulling back, a classic crypto move. The overall sentiment, as measured by the Fear and Greed Index, has swung from greed back to neutral, currently at a balanced 50. It's a market holding its breath, waiting for the next big move. Let's rewind and look at the week day by day. Monday kicked things off with a dose of regulatory optimism. A bipartisan group of U.S. senators introduced the long-awaited Clarity Act, a piece of legislation aimed at finally defining the rules of the road for crypto. The market reacted positively, with Bitcoin climbing to over $92,000. It felt like we were starting the week on the right foot, with the promise of legal clarity that the industry has been begging for. Tuesday was all about the institutions. The Bitcoin spot ETFs saw a massive influx of cash, to the tune of 8,810 BTC in a single day. BlackRock's IBIT fund alone pulled in 6,800 BTC. This wasn't just a trickle, it was a flood of institutional capital, pushing Bitcoin's price up towards $94,000 and confirming that the big money is still very much interested in this space. A report from JP Morgan also highlighted the health of the mining sector, which added about $13 billion in market value in early January. Things were looking decidedly bullish. By Wednesday, the market was in full-on rally mode. Bitcoin exploded past $97,000, hitting an 8-week high. For the first time since November of last year, we were seriously talking about a run to $100,000. The Fear and Greed Index tipped into greed, and the optimism was palpable. It felt like the market was finally breaking out of the consolidation phase it had been stuck in since late 2025. But as we all know, what goes up in crypto can come down just as fast. Thursday brought a reality check. The same Senate committee that gave us hope on Monday decided to postpone the markup of the crypto bill. The official reason was opposition from some industry players, but the effect was immediate. The market's enthusiasm evaporated. Bitcoin retreated to the $95,000 level, and crypto-related stocks like Coinbase and Strategy took a hit. We saw over $320 million in liquidations, mostly from long positions, as the market got a stark reminder of the regulatory hurdles that still lie ahead. And that brings us to Friday. The market is in a state of consolidation, digesting the week's volatile moves. Bitcoin is holding steady around $95,300, up about 6% for the week and 9% for the year. The big event of the day was the $737 million token unlock for Ondo Finance, which increased its circulating supply by a massive 61%. While this created some project-specific volatility, the broader market seems to have taken it in stride. The real surprise story of the week, however, has been the explosive rally in privacy coins. Monero is up over 54% and Dash is up an incredible 125% in the last 7 days. It seems that in a world of increasing regulatory scrutiny, the demand for financial privacy is stronger than ever. Now, let's talk about what we expected versus what we got from the key calendar events this week. The introduction of the Clarity Act was highly anticipated as a bullish catalyst. While it gave us a nice little pump on Monday, the subsequent delay turned it into a bit of a wet blanket. I'd call that a negative surprise. On the other hand, the Bitcoin ETF inflows were a major positive surprise. The sheer volume of institutional buying far exceeded expectations and was the primary driver of the midweek rally. The token unlocks, including the massive Ondo release, were largely a non-event for the broader market, which was expected. The market seems to be getting better at pricing in these scheduled supply increases. So, a mixed bag of calendar events, but the underlying strength from institutional adoption is undeniable. So, what does this all mean for the weekend? Let's look at some potential triggers. From a technical standpoint, Bitcoin is at a critical juncture. The key resistance to watch is that $97,000 to $97,500 zone, which is also the 61.8% Fibonacci retracement level from the previous major correction. A convincing break above that level, with good volume, could open the door to a test of the big $100,000 psychological barrier. On the downside, we have support around $93,000, and then a stronger floor at $90,000. A break below $93,000 could signal more consolidation or a deeper pullback. Fundamentally, the triggers are clear. On the bullish side, any positive news about the crypto bill getting back on track would be a major catalyst. And of course, we'll be watching the ETF flow data on Monday morning for signs of continued institutional appetite. On the bearish side, the aftermath of the Ondo unlock could still create some altcoin weakness. And as always, we need to be mindful of macro risks. A strengthening US dollar or a downturn in the broader equity markets could create headwinds for crypto. My strategy for the weekend is one of cautious optimism. The market has shown incredible resilience, and the pullback from the highs looks like a healthy consolidation so far. I'll be looking to accumulate on dips, with a close eye on that $93,000 support level. If we see a strong break above $97,000, I'll be looking to add to my long positions, but I'll also have my stop losses in place because as we saw this week, the sentiment can turn on a dime. That's all for this week's review, everyone. It was a week that reminded us that the path to mass adoption is never a straight line. We have strong fundamental tailwinds from institutional adoption, but the regulatory headwinds are still very real. As always, do your own research, manage your risk, and stay informed. Thanks for tuning in to Bony's Life. I'll see you all in the next one.